Hello, everyone, and welcome to another episode of Majlis and Markets. As always, I'm your host, Hassan Jivraj. I'm really happy to be doing another episode on YouTube. And don't forget, this will also be on all audio platforms. And please, before we begin this episode, remember to like, share, and subscribe to this podcast, or vodcast, I should rather say. But now I'd like to introduce my guest for today's episode, none other than Said Murad. Said, welcome to Majlis and Markets.
Thank you, Hassan. A pleasure to be here with you today, and thank you for hosting me.
No, it's my pleasure. Said, you've got like a really fascinating background. I met your colleague Noor Suede. Obviously, she needs no introduction. At the Abu Dhabi, I think it was the Abu Dhabi Global Finance Summit last year in December. Abu Dhabi Finance Week, actually, in December last year. And I got speaking with her and talking to her, and she mentioned you and like your background and like it's like your place in the Middle East venture capital ecosystem. And I'm really excited to talk to you today about some of the opportunities and challenges within the ecosystem within the region. But before we get into all of that, Said, could you give our viewers and listeners your background story?
Of course, and with pleasure. Let me reiterate once again. Thank you so much. I am excited to be here chatting to you today. My background, Hassan, I grew up in Jordan. So I was born and raised in Jordan. And I went to London to do my undergrad, went to Imperial College, did engineering, but didn't work a day in my life as an engineer. Went straight into finance. When I graduated in 2006, I moved to Dubai and joined Abraj Capital in private equity. Spent some time with Abraj before moving to Dubai International Capital, which was the private equity arm of Dubai Holding, where I got to work on a lot of cool stuff, from an attempted acquisition of a football club in the UK to one of the most famous restaurant chains, that type of sort of deal flow. It was super interesting. And this was sort of, in I would say 06, 07, 08 and early 09. And then the crisis hit. And as part of Dubai Holding had a mandatory convertible bond out on an investment bank called Sharjah Capital, one of the region's leading investment banks, now known as Sharjah. And that converted into 49% shareholding. But the bank was bleeding, it was losing money and suffering because of the crisis. So they wanted to do a change management. So they brought the gentleman that was chief executive officer at DIC to come in and take on the role of CEO of Sharjah and to do a restructuring. Did that for a few years and then hit a crossroads. Do I go to business school or do I become a career banker? And I took the choice to go to business school. I went to INSEAD, France and Singapore, phenomenal exposure, and then did what a lot of INSEADers do, which is go into consulting. I did strategy consulting for a brief stint, and then moved into operator roles. So I moved to Groupon, where initially I was a director and then became chief exec for the region. Then moved to a large conglomerate called EFS Facility Services, where I was a chief operating officer for a few years, but then moved into the startup world. I joined a vertical e-commerce business called Jamalon post Series A. I had a conversation with their lead investor and the introduction was made, and we found an incredible opportunity for me to come in, chiefly to operationally optimize the business and then work on that company Series B. Alhamdulillah, that was successful. Managed to raise a Series B successfully, and met Noor. Noor was early in building global ventures, still raising our first fund. And we had a conversation where we saw eye to eye. She wanted to bring somebody in who could bring in a skill set of building out, and I will say this, one of the most overbeaten terms in venture capital, but the value creation function here. How do we engage with companies? How do we actually operationally roll up our sleeves, work with founders to help really support? And so that was my my initial entry into VC. It was like, how do you combine an investor operator mindset and bring it to the table and use that to launch a platform which will act as a supportive function for all founders and entrepreneurs in which we invest back. And so that's me in a quick nutshell and how I ended up in VC. And, been part of building global ventures since. It's been an incredible journey. We're fortunate to have backed 70 companies so far, and hopefully more to come.
That sounds great. Do you think like your time at Abraj and like Shuar, that kind of like was the set you up and understand you like business, you like dealing with entrepreneurs? Do you think that kind of like preceded the excuse the pun, but like kind of seeded your interest in VC?
It seeded my interest in the investment world. So as an investor, that's where I had originally sort of earned my chops, as they say. I managed to focus on a different asset class, albeit private equity. Within the PE space, actually, what we did within Dubai International Capital was more on the growth equity side, and it was more emerging markets, at least my focus. So I was less involved on the LBOs and so on, and more focused on actually the growth equity side of things. And so that was the first foray into something that was somewhat closer to VC. But really what then really sharpened my focus and made me want to really jump into VC was my time at the startup Jamalon. That is when I got, very, very hands-on and serious exposure to what venture capital is working on the startup side to raise that Series B, engaging with a lot of different VCs, running that process internally for us. That is what really got me interested in it. And that is what got me to realize that combination of a skill set of an investor through my private equity background, operator, whether Groupon, whether EFS, whether Jamalon, all come together and culminate in a unique role that can allow me to really leverage everything that I had built as a skill set over the years and bring it all into one.
Amazing. Amazing. And then you mentioned you met Noor, and then what's it like working with someone like Noor day to day? Or you don't work day to day?
No, of course we do. I mean, we've managed to put together an incredible partnership and a phenomenal team here. It's really like a family. We work closely together. It's all of us rowing in the same direction, really focused on how we can drive forward with our mission, supporting the best founders in the region, helping them build out the companies that have to date started to deliver some incredible results, both from an ecosystem perspective and beyond. We do feel like there's an important role for us to play in all together building out this ecosystem. I wouldn't say it's still classed as nascent, but it's definitely still early. When Global Ventures started, the MENA ecosystem in its entirety was $200-300 million. Last year, closer to $3 billion. So while it's grown 10x, it's still not, scale. There's still opportunity. There's still room. And we're seeing a lot of the right wireframes, a lot of the right initial, I would say leading indicators that you'd want to see that show the build out of an ecosystem. If you take our regional ecosystem and you superimpose it on, call it LATAM or Southeast Asia, you'll realize that we're behind them, but we're tracking with the right things. We have second and third time founders. We have the first few unicorns emerging. We have success stories coming through. We have consolidation, acquisitions, IPOs. All these leading indicators that you want to see as you start to see the formulation of an ecosystem are all coming through. And so it is absolutely an exciting time. And also allowing us to have conversations with international investors who are seeing this market as an attractive one now. You're seeing a lot of the big international names now coming in, backing a lot of the companies within our portfolio and beyond. And it's a very exciting time to be part of building out this ecosystem to what it can be.
Just specifically on Global Ventures, you guys only do Series A, right? You don't do pre-seed or seed or anything.
Our sweet spot is Series A. So we've done a few earlier, we've done a few later, but our sweet spot is Series A.
And you're specifically focused on the Middle East and North Africa. That's the mandate.
Middle East and Africa.
Middle East and Africa, okay.
Correct,
so by extension, then, which countries do you think at the moment, right now, for the biggest opportunities for an investor, for a VC investor?
That's a good question, Hassan. I think there's opportunities across the board when you find the right founders building the right companies with the right structure and everything. But in terms of where we're seeing a lot of attractive pipeline, I think the UAE and Saudi are really attractive today from the quality of pipeline that we're seeing.
Great. And then what sectors do you think offer the biggest opportunities?
While we're sector agnostic, we're excited by what we're seeing in areas like supply chain tech, agri-tech. Fintech will always continue to play a key role in this ecosystem. Digital health, we're starting to see a lot more opportunities here as well. We've invested quite heavily in the digital health space as well, historically. And so for us, there's opportunities across the board. And then with the emergence and with more democratization of access to technologies like AI, for example. And by the way, just so I'm clear, I do not think that AI is a vertical or a sector. I think AI is ubiquitous. I think it cuts across all sectors. And I think it's now part and parcel of the build of every company that you're seeing on how they're using AI to really enhance and build out their companies in a much more effective and efficient way. But with that in mind, we're seeing a lot of opportunities that are formative, that are leveraging very strong AI or that are AI-led, that are also presenting attractive investment opportunities and attractive scalability opportunities.
I just want to play a bit of a contrarian, but if I'm a VC sitting in San Francisco, or in California, or in New York or Boston, there are many opportunities in Asia, Africa, Europe as well, even the US, Latin America, like you mentioned. What makes the Middle East and North Africa, if we just stick with that for a second, a really attractive region? Because you read the news, it's very oil-based economies, it's very rigid regulatory systems. Do you think these kind of fintechs or ecosystem can compete on a global level?
Yes, in short. We're seeing companies from our portfolio and beyond that are able to scale globally, that are competitive globally. About 20-25% of our portfolio now has more revenues from markets outside the Middle East than they do in the Middle East. Even though they're based here, they've developed their tech here, their core team is here, and their value proposition sits from here to the world. And so we are starting to see these success stories emerging from this part of the world, and that is very exciting for us. That coupled with, to your earlier question on your contrarian view, there's pipeline everywhere. There's attractive investment opportunities everywhere. Sure, I agree with that statement. But that also includes our part of the world. And that also includes the region in which we invest. And so when you look at an opportunity like let's name one of our portfolio companies, Tabby. Tabby would have been an attractive investment proposition for anyone globally for sure, because the problem that they're solving for, the way that they've solved it and the scale at which they've hit has been absolutely incredible. So we've had the privilege of being partners with the Tabby team since the early days, and it's been an incredible story to watch unfold. And so is this an attractive investment opportunity on a global basis? Yes.
What do you think of this I hear this criticism a lot from founders and also from other investors, is that, the deep-pocketed investors within the region, they only come in when, the idea is actually really like getting any traction. They're not willing to go in at like pre-seed or seed. For example, I was talking to an Iraqi-based VC, and he said one of the biggest problems that there's a lot of potential in Iraq's VC ecosystem, but one of the things that he was saying is that a lot of the regional investors don't get in until it's like Series A, B, C, and so on. They don't get in early. They only wait until the concept's been proven. Do you think like they wait too long before they get in?
I mean, we can sit here and debate both sides of the story, but the reality is, Hassan, in my mind, it depends on the mandate of the funds, and it depends on what risk return profile they're looking to underwrite. So understanding the market in which you're investing in, understanding the nuances behind it, understanding what you're underwriting against, managing risk effectively is very important. At the end of the day, a lot of what we do as VCs is manage risk. And so there's different ways in which you can take risk. If you want to be a pre-seed investor in Iraq, there's a certain risk profile attributed to that, and that's okay. And you can choose to do that. And if that is your mandate, then fantastic. But if you are taking a different type of risk profile, and I'm not talking just geo risk, I'm talking there's different elements around it. Is the market there? Is there liquidity? Is there technology penetration? Is there infrastructure? Is it many different things? And you can choose to take as deep or not a risk as your mandate allows you to. And then accordingly,
and the region's not homogenous, right? It's not homogenous. Like each
region
country
is not homogenous. No, I mean, you
story.
have different nuances across different countries. If you want to talk about MENA specifically, let's shape it a little bit. 22 countries, 400 plus million Arabic speakers connected by a common language. But we need to be very cognizant and aware that there are nuances that need to be navigated as you go cross-border.
Yeah, because like, for example, Saudi Arabia is probably very different to Oman, or like, it's very different to Egypt. Like, they're not all the same market, even though they may have the same language or same kind of characteristics, they're all got their own story. From the yeah, sorry, go ahead.
I was going to say, I think there's thoughtfulness in the way in which you can consider market expansion and how you can leverage what you've built in one market to be able to take it cross-border into another. We've seen that with many of our companies. Take PayMob, for example, payments infrastructure business, started in Egypt, now fully licensed and operational in the UAE and Oman and other markets across the region. There is a way in which the technology can scale, in which the technology can cross borders. That's one of the main reasons why we as venture capitalists like investing in technology businesses. Technology is borderless. You're able to scale it. You're able to take it through. But it's important to be aware that as they expanded into the UAE, as they expanded into Oman, there was licensing, there was regulation, there were nuances that needed to navigate. There was some element of localization on the approach that they took to crack the market. And so these things need to be considered, but they are absolutely doable.
And then if we switch it to the founders, you've been in the founder position as well. What would you say are the biggest challenges for a founder of a fintech or a startup in the region today?
So just for full transparency and accuracy, I wasn't a founder. I joined as an exec in the company, so I was a C-suite exec, but I was in a startup. The biggest challenges that are faced, one, are on talent. I think that's a common theme that we hear. The ability of startups or early stage companies to attract the best talent to come in and be part of the journey. We're seeing more of that being solved. We're seeing more people willing to take earlier stage risk and move into companies at that earlier stage. But nonetheless, finding the right people that mesh within your culture, within your value set, who are looking to build the same thing that you are building and want to be part of your journey, that's never going to be an easy task. It's one that we continuously work on with our portfolio, at least, and always look for the best people to come in and support and build out companies. The second challenge that I would shout out is while you'll find access to the right sources of capital at different stages, in general, this is a more capital scarce part of the world, if you will. And so it does affect sometimes the risks which founders can take in terms of their build out strategy.
By capital scarce, what do you mean? What do you mean?
I mean, there's if you compare it to your earlier comment, like if you're talking about, let's say, for example, a market like the US, the markets that are the capital that's available to go into pre-seed, seed, A, B, and so on is volumetrically higher. We're still, as an ecosystem, call it plus minus 3 billion. So in terms of size, as we start to see pipeline growing, as we start to see more and more companies growing, moving into growth stages and so on, we're going to need the capital to scale with it. And so we're starting to see, the indicators for that, but that can potentially pose a challenge. We want to be there to help solve it as well. So there is a role on us as VCs to make sure that we're working on that capital continuum and making sure that we are able to support our founders and founders in the ecosystem broadly to make sure that they do have access to that. we've done what we can. We've built relationships cross-border. We make sure that we highlight our portfolio companies to all the right types of investors who've invested in these sectors, invested in emerging markets. We'll build those relationships out and we'll facilitate whatever we can for our portfolio. But it's important to also be very well aware that this is something that needs action. And so we're starting to take that type of action as well. And on the talent side, yeah, I would say that's also another one that's important to keep in mind.
One thing that just came to my mind is like, if you look at the financing of startups across the world, I'm giving just a very basic example of like Dragon's Den, where someone has an idea and, the investor, he wants like 20%. Would you say like not just specifically global ventures, but do you do like a straight like equity financing, or do you do things like SAFE, or how does it work?
As global ventures, we'll do equity, we'll do convertibles. That's not a problem. We've done both. We've invested in both. Those structures are fine. We don't do private credit. So we're an equity investor, if you will, on the venture within the venture capital asset class. And there are others that provide private credit in the forms of venture debt or others. There's, again, as the ecosystem starts to mature a little bit more, and as you start to see more and more sources of capital coming in, you'll find different types of capital coming in. And so there has been emergence of more and more private credit funds. There has been more emergence of different types of investors and capital that are coming into the market that can help solve for different challenges across the journey.
And then, Said, one thing that I wanted to ask you is like, obviously I reached out to you for that article I was writing on GCC fintechs. This idea that fintechs and by extension online brokerages can challenge incumbents within the Gulf. Do you think that's like valid, or do you think like it's still a while for them to challenge the incumbents?
Look, I think it's more on the collaboration side. So as you think through notions of like banking as a service and how banks can work with fintechs to allow them to take on last mile, generally speaking, for banks recognize that sometimes cost to serve is high. You can't necessarily go and service everybody because of the infrastructure that a bank is required to have and to set up. But the collaboration with fintechs will allow for deeper and more meaningful access and penetration across the market.
Because what I'm just thinking is like before the pandemic, you never heard like brokerages, like you hear about Robinhood and how retail investors got in. Do you think like this is disrupting this industry? Because if you look at it now, right, market makers still they have a lot of gatekeeping in terms of information. They still can, charge a high price. Do you think these kind of technologies are democratizing finance for the retail investors?
To a certain extent, I would agree. I mean, we're investors in Thunder out of Egypt, which is an early stage company operating in that space. They had recently announced a fundraise as well. They're doing an incredible job. And their market penetration in Egypt is quite sizable. They're one of the top performing quote-unquote brokerage houses in Egypt. And it's because of the approach, the UX, the thoughtfulness that they put behind how they work with their client base, that they make sure that it is actually, and not to use sort of a buzzword or anything, but they do democratize access in that sense. And so it is great to see. Or even if you go across to a market like Nigeria, where invested in a fintech or platform called MoneyPoint. MoneyPoint was recently minted as a unicorn. We're very proud to be early investors in that business. But they've also truly solved for a problem of access to financial products and financial services for a lot of the population. And so it's a very, very interesting notion when you're able to see that people are building solutions that are actually very scalable, that can truly provide access and solve for major pain points.
Another thought that came into my head, which maybe seem a bit difficult, is, I was talking to Philip Ahushi from Magnet a while back, and he, about the data availability. Do you think there's enough availability of quality data of which shows like transactions, but also things that didn't go so well? Because one of the points that he made, which I thought was quite interesting, is there's not enough reporting of where transactions don't work out and it's not like public, or the information's not public. Do you think that's a challenge within the ecosystem?
Well, fair enough. It's always going to be a challenge because it's not easy to get that type of information, particularly around private companies. What I will say is that information and data in general, the quality of information and data has improved thanks to people like Phil and Magnet. But what we're also seeing is, from our perspective as global ventures, we like to be thesis driven in the way that we invest. And so for us, information, data, super important. But when we invest in a sector, we also want to deepen our knowledge in it. We want to understand it inside out, identify the right opportunities, the right sub-verticals within each sector. And so we've been publishing research on sectors for years now. Every quarter or so, we'll put out a report. Most recently, we put out a report on the future of work sector. We publish our reports online, global.vc. Go to our website, go to the research tab, and you'll find the reports in there. We'll do sectoral deep dives that can provide that kind of insight, hopefully to help. The reason why we make these public is we also feel like we are all building together this ecosystem. And so we have no problem sharing that information across the board, even though, it's in-house research that we do and put together these reports. Ultimately, it is critical that we have the right type of information shared across the board because we're all building an ecosystem together.
If we look at the more broader macro picture, if we just take out geopolitics for a second, how does the interest rate environment, I mean, obviously we're living in a bit of a higher interest rate environment compared to 5 years ago. How would you say the global economic macro situation is impacting the regions, not just from a funding perspective, but also from a deal flow perspective?
Look, macro consideration is always very important when you're an investor. And it's very important to assess whether that's going to impact ability to access capital, whether on the fund side or on the portfolio side, on the company side. These are all considerations that are always going to be very, very important. I would say by and large, given where we are as an ecosystem, we're still seeing the right sort of leading indicators and the right movements of what we would want to see as we build out from this early stage of where we are. Governments like in the UAE, in Saudi, more recently in like Qatar, have been allocating a lot of developmental budgets towards making sure that they're able to catalyze these ecosystems. That has resulted in the right type of appetite, the right type of investment coming in and catalyzing that market from an early stage. And so when we look at those efforts, we're very buoyed by what we see there, and we're very encouraged by what we see there. From our perspective, yes, we continue to monitor macro. We continue to factor that into every single investment decision that we make. We look at every company on its own standalone basis. We look at the macro impact on each investment and each position that we have, and we continuously assess and monitor that. As I mentioned earlier, managing risk is very important when you're an investor, particularly in an asset class like venture capital. But also, it's a very important factor and a consideration when we're going through our own due diligence on companies, when we run the market DD. Part and parcel of it is assessing macro impact and what can happen and how it can transpire and how that can impact an investment case.
And from like a regulatory perspective, if you go to more high risk markets, and just to stick on Iraq again, one of the things that the VC guy he mentioned to me was that the regulatory environment is quite difficult. But would you say, like obviously in the Gulf, it's probably a different story where it's a bit more supportive, right?
Again, it's part and parcel of what you need to assess and the level of risk that you're willing to take on. And so we're starting to see more and more progressive regulatory environments. If you look at sectors like fintech, digital health, etc., you're seeing the regulators really engaging and being very thoughtful about how they can help create a conducive environment and a progressive environment for this type of growth.
It's a criticism that, there's a lot of hype around places like Saudi Arabia, but like when you talk to business people or investors, in fact, a lot of them still say it's very difficult as an international investor to invest in these markets. It's not easy, right? Especially on the VC side, I can imagine it's still quite difficult.
You need to build your knowledge base to be able to understand and how you price that risk. And so that's the consideration, right? That's why it's important for you to, when you are investing, to your earlier question on international investors, when they see opportunities in their backyard versus cross-border or in other markets, part of it is building out that knowledge base and understanding the nuances that come with every single market in which you want to deploy capital. And make sure that you're well aware of what this environment is like and how it is expected to evolve, or monitor evolution over a period of time for you to see that the trends are stacking up to what you had been forecasting, predicting, or whatever the case may be. And that's why it takes time, but we're buoyed by what we see, as I said.
As we bring the podcast to a close, there's just two questions I had for you. The first is like, for a fintech or a startup, the IPO market in the region has been very booming, I would say, since like last couple of years or maybe 3 years. Would you say that's the route that most of them want to go down, is like the IPO route, or do they want to be acquired by a bigger player? So if you had like a Kareem Uber situation, something like that, do you think that's going to be going forward, like a trend going forward?
If we're talking exits in general, I think globally what you'll see is that the most common path to exit is usually through M&A, strategic acquisition, consolidation, you name it. IPO is a path. And it's important to have capital markets and to have the right sort of optionality in terms of that being a path. But also the path on the strategic side is an important one that should definitely continually be considered. And so you're going to see, different companies that have different trajectories or a different path towards how they want to go and execute about it. But I think you'll see more and more consolidation akin to what you would see in global markets and the trends that we've seen globally.
And my other question, Said, was which country within the Middle East and Africa, or within your mandate, do you think will surprise investors in the second half of this year?
It's a really good question. Look, I'm excited that how things are shaping up in Egypt. I think Egypt has always been a very strong market and will continue to present very interesting opportunities.
Yeah, Egypt's definitely a good one. We did an episode with Walid Hassouna from Value a few months ago, and I think they're doing some interesting things there. But Said, tell us any projects you may be working on, any upcoming projects you may be working on, if you can.
I mean, we have a very interesting pipeline just for just out of respect for companies in our pipeline. I can't disclose the names, but we do have quite a few interesting companies in pipe that we're excited to be assessing. We've made a couple of recent investments, one of which we announced. We announced an investment in Terjama recently. We led their Series A. And there's another one that we've just completed, which hasn't been announced yet. Watch out for that one soon. Very interesting business as well. And there's a few more in advanced pipe. It's we're very bullish on what we're seeing in pipeline.
Amazing. And what's the best way to reach you, Said?
LinkedIn, I think is in ventures. It's the easiest
And
way.
are you active on Twitter or TikTok or?
I'm more active on LinkedIn than I am
On
on.
LinkedIn. Okay, I'll link in the show notes. But Said Murad, this has been a really fantastic conversation, and I wish you and Noor all the best and the team the best for the second half of this year, inshallah.
Thank you, Hassan. I really appreciate it. Thank you so much for having me once again.
Thank you, Said.
Thank you.